As the saying goes, there are really two certainties in this life: death and taxes. And with the new IRS tax reporting rules going into effect in 2022, you don't want to get caught with your pants around your ankles. Join me, Pokemon Classics, as we take an in-depth dive into how these new tax rules will affect individual sellers on online platforms, as well as what effect it might have on the broader market. Let's roll the intro. Hey everybody, what's up from Pokemon Classics, reminding you that the classics never go out of style. You know, this is a topic that's rarely talked about on YouTube, but it is one of critical importance, and that's taxes. Now, I am not a licensed CPA, nor am I a tax professional, but what I do know is that recently the IRS has changed tax reporting rules going into 2022. These are for online sales platforms like eBay, PayPal, you name it. And a lot of individual sellers are going to go through the year unaware of these changes, as well as the tax liability that it's going to incur for them at the end of the year. I don't want to be in that position. I know nobody wants to be in that position, and that's what this video is all about. Now, you'll have to consult with your local tax professional to get personalized advice. This is really just more generic. But in this video, we're going to talk about how that tax reporting threshold has changed from what it's previously been. It's significantly lower now. How you might file taxes as either a business or as hobby status, depending on the type of selling you're doing, as well as what type of impact that may have on the broader market as a whole. Overall, I think this is an important video, one that a lot of people can glean some insight from. So if this is something that you find helpful, leave a like down below, maybe give it a share. I would definitely appreciate that. Anyway, let's roll into it. So last year, as part of the economic recovery plan, the threshold for issuing 1099-Ks was lowered substantially. Now you may be wondering, what is a 1099-K? Simply put, it's a form that's submitted to both you as a seller, as well as to the IRS by whatever platform you're operating on, stating how much income you've earned, whether it's through places like eBay, through PayPal, Amazon, really any of those third-party platforms for online sales. Now in the past, this threshold used to be 200 transactions and $20,000. It had to meet both of those in order to warrant the issuance of a 1099-K. However, going into this year, that threshold has been significantly reduced to the point where now it's just $600 in total transactions, regardless of how many sales, regardless of how much of that happens to be profit. So this begs the question of, why does it matter? Well, technically it shouldn't. Regardless of how much money you make and what platform you make it on, you are required to report that income on your tax documentation to the IRS. However, the fact remains that a majority of small sellers don't do this. They're looking to fly under the radar, and perhaps they have in the past. But the issuance of these 1099-Ks is going to make that significantly more difficult to do in the future, and I think a lot of sellers are in for a rude awakening at the end of the year when suddenly their tax liability comes due. Now again, to stress this one more time, I am not a tax professional or a licensed CPA, and this is just my understanding of the existing tax rules, but it's a very, very complex machine with all sorts of different rules, restrictions, requirements, limitations involved, and so I strongly suggest you consult a certified CPA to help plan what's right for you when it comes tax time. Having said that, I want to present some generic examples to show how these different processes work and the different options that are available for filing taxes when selling online. When it comes to reselling collectibles online, there are really two different avenues for tax treatment: business income and hobby income. And the IRS has a number of different limitations, definitions, and qualifications on what's defined as a business. However, I find that most of these boil down to, are you taking attempts to sell regularly throughout the year? And are you making efforts to ensure a profit or to increase the level of profit that's being made over time? If those apply, there may be a chance that you're eligible to qualify as a business. There's also a misconception out there that to qualify as a business, you need to file special paperwork or form an LLC, and that's just not the case. Just by default, as a seller, you can instantly become a sole proprietor without any additional work or legal fees or paperwork or anything like that. Back to these two different income types though, business income is taxed on 3 different levels: federal tax, state tax, and self-employment tax. Whereas hobby income is only taxed on federal tax and state tax. That self-employment income isn't eligible because you're not considered self-employed if it's just a hobby. The other big difference is as a business, you can deduct not only the cost of the items that you originally purchased, minus the sale price, that's how you determine your profit, but you can also count a number of different business expenses, whereas for hobby income, you're still able to calculate that cost basis of what originally you put into the items, but you're not able to take any of those extra business deductions. And this is where the taxing gets a little bit complicated. Let's use a hypothetical example to illustrate the differences between these two tax treatments. For this example, let's start with hobby income, which is taxed as capital gains. Now, in this hypothetical, we'll assume we have a regular job that pays $50,000 a year. Then on top of that, a side income from online eBay business, which comes out to $10,000 in profit after we subtract the eBay fees, the shipping fees, and all of that. Now, if we were doing this just as a hobby and didn't meet those other requirements of what a business is, we'd be paying the federal income tax, which at $60,000 would fall into that 22% bracket, because there are different federal income brackets depending on how much money you make. Similarly, the state income tax is going to vary. Here in Minnesota, we have the 5th highest income tax of any of the states in the United States. That rate at $60,000 would be 6.8%. So on that $10,000, our tax liability would be $2,200 to the federal government, and then an additional $680 to the state of Minnesota, making up a total tax of $2,880 by the end of the year. Now you'll notice that there's not an eligibility to take additional business deductions, so we can't really subtract anything against that $10,000 in profit. And that's part of the beauty of capital gains tax is it's more simple, but on the other hand, there's less flexibility for making investments into infrastructure that might actually be helpful for growing the business. Now, comparing that to business income, maintaining the same hypothetical situation with the $50,000 paying job, along with that $10,000 in eBay profits, but as a business, we would still be obligated for the same federal tax rate, the same state tax rate, but in addition to that, we would also be required to pay self-employment tax, which is 15.3% on all profit. Now, that self-employment tax is geared towards Social Security and Medicare, and although part of it is tax deductible at the end of the year, it's a pretty hefty tax to heap on there. In fact, in this situation, that would equate to another $1,530, making our total tax liability $4,410. However, this is before any deductions, and that's where business income has an advantage. I can't understate this enough, but the ability to deduct relevant business expenses is absolutely key. The problem is, though, many sellers won't do this throughout the year, and then when it comes tax time, they're going to get wrecked. So always keep track of your expenses, and here's why. Let's take a look at this tax bill again using the same metrics, but this time factoring in some eligible deductions. Let's say, as a business, you invest in a camera and lights so that you can take product photos to upload to eBay and to other places where you're selling. There's $2,000 against your profit. Perhaps you buy a laptop so you can take work on the go with you, edit videos, edit those photos, post them. There's another $1,500 against your tax liability. Let's assume that there's some office supplies involved. Maybe you need to buy a printer and ink throughout the year to print shipping labels. $500. Maybe for a home office, you've got a space, a room that you dedicate solely for business purposes, where you have a desk, where you store all of your items, your packaging materials. There may be a deduction that's available there. Let's say you go to a conference or an event like Collecticon, and you have travel expenses and meals. Some of that, sometimes all of it, is deductible against your profit. Vehicle mileage, driving back and forth to the post office to ship your items. Then maybe other expenses, whether it be top loaders or packaging materials. Maybe you have some subscriptions online for services that you use like eBay store, and we deduct those. Here we've quickly raked up $6,000 against our total profit, bringing the profit margin down to $4,000. When we apply those same tax rates against $4,000, suddenly we're paying $880 in federal tax, $272 in state tax, and $612 in self-employment tax. Now, this brings our total tax burden down to $1,764. And while it's true, you only have a couple $1,000s left of profit to put in the bank, many of these tax deductions, these items that you're purchasing, are in theory things you would have had to buy anyway to sell the items that you were selling. You'd need a camera, you'd need a laptop, you'd certainly have to pay for the printer ink and the shipping supplies in order to send those items off in the first place, so you might as well count those against your profit, but that's only doable if you're operating as a business. Now, I'm not familiar with all of the rules and specifications and limitations on any of these deductions, so I would personally recommend you visit Mark2 on YouTube. He's a fellow YouTuber and also licensed CPA who specializes specifically in online reselling. I know he's got a ton of resources available on his website, like videos that he's posted on YouTube about reselling, about taxes, about deductions, and filling out paperwork, accounting methodologies. I know he actually has a whole online course. I haven't been through it myself, but I've heard good things about it. He also has spreadsheets that he provides for free that I personally use for tracking inventory, tracking sale prices, tracking a number of different things, and they're pretty great. So if that's something you're interested in, I'll leave links down in the description below. It's a good starting point. You can personalize it for your own needs. I know I've kind of transformed it myself, but it was definitely helpful as a new seller. Finally, in this video, I wanted to address the market impact that these new tax reporting requirements may have for individual sellers, but also for the market as a whole. Now, what I think we're going to see is a strong deviation between small sellers and large sellers. And there's no doubt that taxes pose a major disincentive to even bother selling online in the first place. And for a lot of smaller sellers that haven't been reporting their taxes in the past, because that 1099-K wasn't automatically issued, now suddenly they're facing a lot more paperwork. In addition to that, just to sell on platforms like eBay and PayPal, they're now requiring that a social security number be added to the account. And of course, this also translates into less profit. If suddenly 30% of what you're making on a sale is going towards taxes, well, that's going to be off-putting for a lot of people, where they feel like it's maybe not worth their time anymore if they're not going to be getting the same return back. Because of these factors, there may be a mass exodus of small sellers off online selling platforms like eBay and PayPal, while those who continue to sell may raise prices to offset some of that tax liability. You know, if they're making 30% less on each transaction, they might need to make up for it. On the other hand, we have large sellers. Now, large sellers are generally already paying their taxes and likely have been for years, so this is just sort of the status quo for them. Their profit remains unaffected. But on the other hand, with those larger sellers, they may suddenly experience fewer competitors if many of those small sellers are off the platform. If there are fewer cards being sold that they have to compete with, well, that might also result in less saturation of cards on the market. As a result, businesses might have an incentive to raise their prices in response to less market competition online. So, in a way, I think this could be a catalyst for a slight market rebound. Now, I'm not saying it'll be anything like what we saw in 2020 or 2021, because prices certainly are coming down right now. But if sellers are scared away from the platforms and don't feel like they can maximize their earning potential, maybe prices will go up due to fewer products being sold. Lastly, I want to share a personal speculative thought with all of you. There's no shortage of inexperienced collectors and flippers that have entered the market in the last year or two, and many of these collectors and flippers priced themselves in at the top of the market when prices were at all-time highs, historic records even. And for many of them, they were looking to take advantage of these historic prices by buying cards and then immediately turning them around and having them graded with the hopes of increasing their value to sell and flip later on. However, what nobody was expecting was for these massive grading backlogs from places like PSA and CGC and BGS, and as a result, the market has been correcting, perhaps in part due to the saturation that those graded card backlogs have created in the first place. So not only have these sellers gotten hit with lowering prices as the market corrects, in some cases pretty significantly, but having to wait really long times to receive their cards back in the first place. I know I personally am still waiting on a PSA order from almost a year ago, and I'm not alone in that. But now, on top of all of that, many of these sellers are going to be expected to pay taxes on the sales that they do make, even at a time when those sales are going to net them significantly less money than what they were planning on. For many of these sellers, they probably weren't planning on paying taxes, whether through ignorance or just trying to go under the radar and not report that income. The problem is, someone won't account for the taxes at all, and they're going to get blindsided at the end of the year when they don't have the actual money to pay back their tax bill. This could be problematic. It could vastly change the landscape of sellers on these online platforms, and it's just something I think you should be aware of so that you don't end up in that same situation. Anyway, guys, with the new IRS tax reporting rules coming into 2022, make sure you're staying on top of this and that you're thinking smart about how you're operating your own sales so that you don't get stuck with your pants around your ankles. This is not a situation anybody wants to be in. You do it by the book, you'll save yourself a headache later. Anyway, I don't have all the answers, so definitely consult with your local CPA, with your tax professional, and figure out what's going to work best for you. Nevertheless, I appreciate you all for joining me in this video, and I'm Pokemon Classics, reminding you that the classics never go out of style. We'll see y'all with the next one. Till then, have fun, live well, be healthy. See y'all.